This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm somewhat more comfortable collecting real estate than I am collecting other stuff.
This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill. This morning, we interviewed Bradley Kirschbaum from Symphony Capital Group. Bill, what do you think?
Bradley is playing above the rim along with his partners. It was an amazing interview, and man, he gave us some secret sauce at the end of the episode that we can really run with. So we have to have him back because he's got some very large deals going on right now in a strange period of time. And, he's done a tremendous amount in 3 or 4 years.
In one way or another, he said all of our favorite sayings today: go bigger, faster, flight to quality. He's under contract on a $48 million building, and he feels like he's not going fast enough or big enough. Just the level of thinking, the level of commitment that this guy has, that this company has, it's really impressive.
Yeah, and he's gone from the single families several years ago to the LPs, but then right to a super competitive market in Texas, right to Class A assets. And we didn't get to even ask him about that level of buying C- or C+ and doing the value add template. I think he just went right to Class A, and he's getting it done at that level.
Yeah, we could have talked to Bradley for another hour there easily. He had a successful career as a naval officer, a pilot, and he uses a lot of the systems from that career in the real estate investing. And you can see how the back end work he puts in is what's driving the success they're having.
Yeah, everyone, you have to have your own tricks of the trade. If you're doing the same thing everybody else is doing, it's going to be hard to separate yourself. And he certainly has some unique techniques that allow him to grow that quickly.
If you're someone looking to have 7, 8, 9 figures of assets under management, this is definitely a must listen. Bradley Kirschbaum, thank you for being here this morning. Excited to hear more about your real estate story and about Symphony Capital Group. Can we get right into it and hear how you got started into real estate investing?
Yeah, hey guys, thanks for having me on. How did I get started? Honestly, I grew up in Janesville, Wisconsin, and if you might know, Janesville actually shut down a General Motors back during or just after the 2008-2009 crash. And in that interesting time of our country's history, a lot of people lost their jobs. About 3,000 people lost their jobs in our 65,000 person town. And things weren't doing so well for them, but also a lot of people who maintained their jobs and had been investing in the stock market also had a hard time and also had to keep working for another 5 or 10 years, whatever the case may be. But I kept hearing about and met people who had passive income. They had rentals, they had real estate properties, and they were able to float through the situation because their investments had an immediate impact on them. And at the time I was in high school, but that lesson stayed with me for a long time. So I graduated Marquette in 2012, started investing in all types of things, and over a few years realized that real estate had all the benefits that I wanted. And after dabbling in some single family situations, by 2016, 2017, I knew that multifamily was the way and started looking at syndications and LPing into those. And by 2018, I knew that that was a business model I wanted to pursue after I left the Navy. And so I started spinning my wheels and looking for partners and meeting more people, getting involved in the industry. And by 2019, Symphony Capital Group was up and running. So that's really how I got going and why I went this direction.
Wow, fantastic. Well, let me start off by thanking you for your service in the Navy. We all appreciate that. So looking at that story, Marquette in 2012, the one families in 2016, 2017. So many real estate investors start small. We figure out what real estate investing is all about. And many of us quickly realize that single families is a hard way to build quick wealth. Well, I don't want to say you build quick wealth in real estate anyway, but scaling is obviously a much easier way to build wealth quicker. I like how you became an LP in 2018. So you're just getting your feet wet, learning the business, learning syndications, making money passively at the same time. And then 3 or 4 years ago, you're getting serious about starting a capital group and getting into syndications. I have to ask, based on Wisconsin, General Motors being one company, they go down, basically take the town down with them. So it gives us a clear vision of how important demographics are
Yeah.
and jobs, diversified jobs in any area to have a stable rental market. Where are you doing your investing now or since 2019?
Texas. So my wife and I still LP into things. Symphony Capital Group, we're focused on Dallas. The rest of Texas is also attractive, the major metros. But my wife and I love Texas. I like North Carolina and Florida as well. I've worked with other sponsors to LP into those areas. But, spreadsheets aside, numbers aside that you're trying to hit, what you just alluded to, um, is population growth. Like, you need stability. You want a constant flow of increasing demand wherever you're looking for rentals. A population stagnation is okay. Like, inflation will float you, but increasing demand and continuous demand is just critical. I really don't care what it says on the Excel sheet. I want to know that more traffic is coming to my city where I'm investing, and that I'm just going to have that nice steady flow of individuals that are just considering renting from me, whether I'm an LP or a GP, whatever the situation is. That's what I'm really looking for.
I like how you mentioned even in high school when the '08 stuff was going on, you noticed the real estate investors doing well. You seemed like you were aware of what was going on around you and had an interest in finance even at that time. And then getting out of school, you said you invested in the stock market, still just continuing that interest. And I think that's where it all starts, is being aware and having that interest. As
Yeah.
far,
So
go ahead.
there's some specific background stories to that, right? Some family friends that had cash flow. I kind of like learned the lessons of why being paid now or effectively making a dividend was so critical. There were some lessons on why buying into a product like real estate, in particular, the type of real estate that someone lives in, why that is so crucial, because they want to continue to live there, right? Like, it is a product that people continually want to pay for, and they will pay a premium for it. And of course, not everyone's looking to uproot themselves every 3 to 9 months, right? They want to continue through into the next lease cycle if you have a quality place for them to stay in. And understanding that and understanding how that continuous demand compared to the demand for, I don't know, let's say an iPad versus some tablet from another company. That's a Russian roulette game in terms of demand that I'm not willing to play anymore when it comes to the bedrock of my wealth. Where I'm willing to buy into some interest in equities, try to find the next Amazon, but I'm not doing that with my critical dollars. I'll do that when I'm set up and I know my lifestyle is secure and I know my bills are being paid, right? I'll go back to that one day. But for now, I want the product that everyone needs to pay for at the first of the month.
You're
That's really the
explaining,
lesson that I took away from that.
yeah, you're explaining why I love multifamily. Like selling a widget, it could be a fad. Even office space, something like a pandemic happens and there's uncertainty. People are always going to need a place to live. Getting
I mean,
back,
look, I'm making high teen percent returns on tax advantage investments that people need to pay for. What more can you ask for? You really are going to go out there and try to seek, maintaining high 20% returns on pieces of plastic. No, I don't want to play that game. Real estate's fantastic once you get to know it.
Just makes sense.
Yeah.
Getting back to the Dallas market, are you a lead sponsor in that area as well?
Yes, we Symphony Capital Group's lead sponsor right now on a 200 unit deal in Allen, Texas. It is a beautiful situation, and we're going to continue to buy in Dallas, just thanks to some traction and relationships we have there, and that's critical within real estate. I mean, you can go around finding a lot of great deals of all different sizes, but if you want to uh, dominate and buy continuously, and we're trying to rack up 1,000 units in the next 12 to 18 months within Dallas. Relationships are everything. Even as an LP, as an investor, I want to know what my go-to sponsors are going to be bringing me. It's not random, right? But my inbox is full of products and people that I want to hear from, that I want to invest in, because I did some vetting, because I figured out what those individuals would be bringing me. And both as a GP and an LP, it's all about finding the people that can execute and find the products that you really want to ensure you actually jump into the things that make sense, right? But we're the lead sponsor on this project in Dallas. It's a great situation, beautiful, best in class type of asset, the type of place that's going to be in demand compared to all the comps for the next 20 to 30 years. And that's what I want as an investor. I want, numbers aside, I want the best looking property that everyone's going to consider jumping up into if they can afford it, or backing down into if they're leaving their house, or there's a problem in the economy and they need to go back to renting, etc. I do not want to compromise and play this game where I've got some crummy property and the numbers look good, but I was able to buy it cheap, and we're kind of running it lean and trying to just keep it occupied enough. I don't want to play that game. I want to know that people like my place and they want to live there, and they pay a premium because I paid a premium because it's a nice spot, right? That's the kind of asset we're going after. That's the kind of asset I want to be a lead sponsor on.
I love that. Flight to quality. So you're looking for quality assets. Going back to 2018, 2019, you decide to start Symphony Capital Group, get some partners, and grow. What did that look like? It was only 4 years or so ago. Did you just move to Texas and then develop relationships? Because we do know how valuable they are, not only finding partners, but finding deals. What did that look like as far as 4 years ago till now, as far as building up that partnership team for Symphony?
So I'm still in San Diego. So we are doing this at 6:30 in the morning. Good morning, gents.
Sorry about that.
And yeah, I've been
Unless you're in
here
San
for 8
Diego,
years.
And
it's hard to feel bad.
And he was in the Navy, so he's used to getting.
Yeah, look, hey, I'll be honest. In investing in business, I look for an edge everywhere. I'm doing this podcast because when I heard of you guys, heard a couple pods, it's like, okay, yeah, I'll jump on that. And then I saw your sign up, and it was all 6:30, and I thought, okay, I don't know if I want to do that, but I clicked the button because I realized I probably won't be competing with too many people from the West Coast. So if your audience hasn't heard of someone from the West Coast, I'm going to be their guy, right? Like that's my mentality. That's why I'm here. But I do wake up at about 6 every day that I can. But more to the point, I'm LPing, and first position was probably beginning of 2017, and getting that figured out. Start falling in love with Texas. I've been hearing about Texas, all the good benefits, some growth, no taxes. Businesses are starting to move there. Austin's kind of blowing up at that time, which was nothing compared to what it is today. But Texas just keeps getting better and better, and I'm interested. As I meet my partners in the end of 2018 going into 2019, they're not my buddies. We're 4 guys who just got to know each other over the course of 6 to 7 months via networking. We just slowly ran into each other. We kept seeing each other and realized we were the guys who were bumping shoulders at the same multifamily meetups, the same real estate meetups. We're all receiving the same, realtor cards at the happy hours or the coffee shops or whatever. And we're all in the process of trying to figure out how to go bigger in multifamily in one way or another. As we got to know each other, we knew we had the right strengths and weaknesses to complement each other, and that if we combined up, we'd be a formidable group. So that's kind of really how we got to know each other, and eventually knew we wanted to pull the trigger. In terms of focusing on Texas and how do you go from doing nothing in 2019 to 2022, where we're in escrow on a $48 million property right now, which is kind of mind blowing to me, frankly. That takes a lot of time and effort, and it really does take talking about and doing one thing again and again and again. And while I just got out of the Navy recently this spring, I mean, by the time this airs, I'll probably have been out of the Navy for 2 months. I was getting up at 6 a.m. prior to my day job to catch up on emails, to talk with the guys, to look at the material they sent me, to email investors or potential investors, then going to work, getting on Gmail as much as I could and staying plugged in, and then getting out of work that night and coming back to the guys and meeting up or talking about this or that. And in the beginning, anything and everything goes, right? If you don't know exactly what you're after, if you haven't done it before, we were looking all over the Southwest. We were looking at partners anywhere. We were taking Spirit flights to Tucson, Albuquerque, KC, Austin, just anything that looked like it might work. We were looking at it. And eventually we did find great partnerships. We've co-GP'd, we've lead sponsored now, and we've done it in multiple cities. But eventually we got to a point where we knew we had enough investors. We knew we had enough traction with particular brokers. And we just kept honing in and focusing on Dallas. And if you focus on something, you will be just on a path towards whatever you're looking at, right? It's like driving a car. Whatever you look at, your car is going to veer towards that thing. And at least with flying, that's true. Maybe not so much with a car, but within flying, whatever you focus on, you may start to adjust and fly towards that thing. And we kept looking bigger and bigger. We kept looking for bigger investors. We kept looking for bigger properties, and we kept looking for things with certain efficiencies. And that's what we're finding today. It is a simple matter of not spending a time looking for 6, 10, or 20 units and saying we want 100 units, we want 200 units, and spending a lot of time going after that and finding investors and brokers and KPs that were in that realm as well. So that really was, I guess, the secret sauce of kind of going from small to big in a short matter of time, was just continuously talking about and looking for that.
Bill often says you get what you focus on, and I think you sum that up pretty well. Texas is great. I just went to Austin for the first time this past year. I think Bill did for his first time as well. It's a fun city, fun state. I could definitely see myself going back there. And there's a lot of things you touched on here, but I like that you mentioned that you were attending meetups, and that's really where you form that partnership. And you were taking the time to wake up at 6 a.m. before your day job, go to the meetups, go to the coffee shops, and that's why you found these partners and started this capital group that you started. If you didn't put in that time, that work, a lot of people say they want to be real estate investors, but they don't take those steps. It doesn't happen without going to those meetups and networking, making the calls to brokers, taking the flights to markets, and doing all of those things. Once you establish that team, it seems like you have a great team and a great group going now. What is your role within that organization? We like to say we fill buckets. There's different buckets to fill any investment. What is your role within the company?
Yeah, some kind of back end, mostly after acquisition, directing with the asset management. I try to, as we get going here, I try to take as much off of the hands of the other guys so they can keep focusing on the front end and keep finding investors and keep finding deals and keep executing and getting us through escrow. They bring advantages as a senior underwriter for a bank, as a guy who's managed a portfolio of mobile home parks, as a guy who's been raising capital for all different types of projects, including a lot of real estate. That's kind of where they all came from. And my position as an officer in the Navy came really from management. I'm a helicopter pilot, of course, but realistically, I was managing millions and millions of dollars of assets. I was managing hundreds of people at a time, and I was implementing systems and processes. And basically, everything I was doing paralleled into asset management and real estate really well, in terms of just understanding two-person accountability, understanding how you're going to have to flex on what was the game plan, right? We got into this property in Austin, and within 2 months of the acquisition, we had a natural gas leak, right? That wasn't in the underwriting. That's a lot of, but that throws a crux in things because you're, adhering to what was the checklist. You're adhering to what the manual did say. And then when something jumps out like that, it turns into, okay, what do we have to deal with? Who needs to be involved? How do we keep tenants happy? How do we keep tenants safe? How do we go about this legally? What do we have to do with the city? What do we have to do with the gas company? How do we ensure this is an isolated situation? How long is it? There's all these questions that start popping up, and having a sense of urgency is one sign of being a good executor, but the other sign is covering all your bases, even if you didn't know what those bases were. So it turns into on being a people person and being a good manager, and that includes continuously finding ways to deal with the issue, not just dealing with the property, third party tenants, but referencing back to other investors, finding mentors. But I mean, when the natural gas leak happened, we found at least 6 other groups that had natural gas leaks, right? Just to get their take, just to understand what the implications were. It was the middle of winter, guys. Granted, it was Austin, but it was still the middle of winter. There were a lot of implications there. So I think having a sense of urgency, being hands-on, and really just caring for the fact that people manage, invest, and maintain your business, whether they're the tenants, the managers, or the investors. It is all people, and you really need to care about everyone who is somehow hands-on or participating in your business. And I think that for us has been a key factor, is to maintain awareness that all these people in some shape or form matter, and we need to attend to their needs, whether they're the tenant who doesn't have gas, or they're the investor who's wondering if building number 3 is going to blow up, right? You have to continue to keep that at the forefront of your mind if you're going to succeed.
Yeah, we underwrite their projections and assumptions, and real estate brings surprises. Even when, in your situation, you're just looking to find A quality properties, getting A quality tenants. A quality tenants expect a quality service, which I'm sure you provide. But at the same time, I appreciate that gas leak really shows when, all right, you can provide great service on a daily basis, but when something majorly unexpected happens, like a gas leak, you take care of business and your tenants notice that. What was that other dynamic that happened in Texas? Was there a snowstorm and then most of the state was out of electricity or water? Were you involved in that?
There had been a hail snowstorm that didn't really have and it didn't have a direct impact on us, no. But
Lucky
I've got
you.
I've got people around us who have a lot of good pointers from that. And
Yeah, so you, so
frankly, I
you, de-
expected more.
you dealt with the gas leak, and I'm sure you handled that very, very professional based on how you run this company. What I'm very interested in, it seems like in a short period of time you put this partnership together where you guys have built some serious momentum and have accumulated a great amount of units, especially when you're already looking at that high quality stuff. That partnership, was there a certain of accountability when you started till now where you guys all leveled up? I know you described each partner certainly had a serious skill set from their previous careers. Was it just something where it's just like, wow, we're all high level individuals, put us together and we can do high level stuff? Or usually it's not that simple. Did you guys have to deal with some growing pains and get to a certain accountability where you were able to level up to where you are now?
I had to reflect on that in real time. And I think when you get going in this business, I've met plenty of people who are looking for 1 or 2 properties a year, right? And they want to pick the best cherry that they can find, and they'll execute on that. And they don't want to take over the world by any means. But I think a few things that we discussed as we got going stuck to us, right? We want to be a brand that is synonymous with the words real estate investing. I'm not interested in doing this for the next 5 years. I'm not interested in making some money. I'm curious if I can be a part of a system that establishes a known brand. I think that is such an interesting thing to be a part of and see grow. Like why do people care about Apple, Mercedes, Google, etc.? I'm interested if I can accomplish that. It's not about me being the man. I don't want to be Grant Cardone by any means, but I'm interested in being a part of a brand one day. And right now, that is a part of why we're trying to grow and go big. And I think when it comes to accountability of achieving larger things, there's a lot of deals that we passed on that were good deals, and it had absolutely nothing to do with the numbers or the quality or the position of the asset itself. It was completely about, okay, this is a really nice 40 unit Grand Slam. I would love to have my money in this. I'd love to be an investor in this. Does this make us grow? Not necessarily. 200 units makes us grow. And so that it was always another factor as well. But more specifically, and this is getting into the inside baseball, but to me, it's 2022, spring of 22. Right now, we're seeing debt shore up. We're seeing pref equity shore up. We're seeing common equity investors think twice, maybe 3 times about what they're doing. And who knows where inflation is going, the Fed's being aggressive. There's a lot of ifs. There's a lot of stuff going on that hasn't happened for a long time. To me, if we're going to get through as a company, if we're going to push through a flattening or push through a downturn, scale is necessary, because the advantage that I believe you need in a downturn is to be large enough to pick the best assets. And not only that, but I firmly believe that in an environment where cap rates are going up, buying wholesale and buying portions or entire portfolios is a critical capability for a company to continue to buy well. I think it could get extremely hard to continue to find numbers that work, in particular at the size that we're buying. So to me, being able to raise $20 million to buy multiple assets at, let's call it a 4.5 cap, and sell them at a 4 cap 12 to 18 months later, is one of the necessary things we need to be able to pull off to be able to survive. So in fact, there is I'm mitigating future risk for our company by trying to make our company as capable as possible in the next 12 months or so. And to our investors, I've said this to multiple LPs. Look, we're getting into properties that are great. There's a particular style, particular quality we want, particular numbers we want. And today what I can give you is tax write-offs, cash flow, and appreciation. Kind of the same thing as every other guy, but I'm doing it my particular way. What I really want to give you is the opportunity to invest with us when there's a downturn, because we are right now planning for that. I mean, who are you? Who am I as an investor going to go to who's capable of continuing to find great deals if we're in a continuous downturn, if we've got cap rate expansion, etc.? I firmly believe that being able to wholesale is one of the ways to continue to survive and find deals in that environment. So that's really what we're after. So that's kind of my inside sauce for you right there.
There's a big difference between entrepreneurs and small business owners. There's not a problem with either one, but there's a difference in the way they think. There's a difference in the way they execute business plans, and if they even have business plans. And it sounds like you and your group are definitely entrepreneurs, and you're scaling to become a brand. This is the Collecting Real Estate show. So I heard you mention a $48 million property under contract. I can't just brush over that. Can you tell us more about this property? How'd you find it? What do the numbers look like? Where is it? What's the plan with this?
Yeah, and look, there's great reasons to buy a 10 unit. There's great reasons to buy a 500 unit property. To each their own. Do what is necessary and makes sense for you. And with the explanation I gave, that's why we're scaling, right? That makes sense for us, survivability and growing a brand. But to the 200 unit, $47.8 million purchase over in Allen, Texas. It's beautiful. Yeah, and guess what? They basically can't develop more of them. The zoning over in Allen doesn't really afford for much space for many more garden style properties. Maybe one or two more can squeeze into the zoning, but realistically, they're not going to pop up on the market pretty much ever. And we're in an area where, back to what I'm looking for, we're in an area where the household income is almost 110,000 per home, and you know, a lot of people would say DFW's, it's obviously hot, it's expensive, but we are buying an asset where, looking at the tenant numbers, our rent that we expect to demand is lower than the comps, and the comps are not as nice, and the household income is basic, or excuse me, I should say the tenants are going to be paying about 24 to 26% of their household income. Compare that to the theoretical ceiling of a tenant being willing or able to go up to about a third of their household income. There's still a lot of margin there. And when you talk about how high things could go, when we have people at the Holiday Inn renting for 30-night, extended 30-night contracts because they can't find another place in Allen to move to, and we can see that when we're doing due diligence, right? They're pretty much willing to pay what it takes to get into a unit, and not that we're asking for that, but we know that we're not even we believe that we're not even close to the ceiling. We believe that there's still great margin in the current environment, and feel very safe, right? But that's part of where we're buying and why we're buying there, because yes, the delta is huge and things are continuing to shift and move and post rent rates that have never been seen before in the area. But according to what we're looking at, there's actually a whole lot of room for more absorption there. So if I can buy a premium asset in an area where the tenants aren't even paying a premium in comparison to lesser areas where they are forking out 30+% of their income, I'm going to buy that. I'm going to hold that. And while the business plan says 3 to 5 years, again, in the back of my mind, I want an asset that would be beautiful for 10 to 20 years. I want something that is going to be beautiful on the exit, and I want something that theoretically we could hold indefinitely, right? Everything looks better than cash right now, but real estate to real estate, I want something that not only looks good on paper, but looks good to everyone involved. So that's part of what we're looking for over in predominantly the east side, northeast side of DFW.
I love how you explained Allen, Texas. We know Texas as one of the most competitive real estate investing states in the country. You're looking at Class A investments. You described Allen having this scarcity of multifamily. The zoning doesn't allow for a lot more of building, and you have that scarcity. People are held up in hotels, and you have that supply and demand issue for these types of apartments, which is a fantastic position to be in. Are these the types of areas you look for throughout Texas, where you're not just going to any city in Texas with good demographics, because population is migrating to Texas? So are you trying to cherry pick these specific spots where you can find certain scarcities like Allen, Texas?
Yeah, if we can. I mean, what we see on paper, what everyone sees on paper, first of all, I like to stay plugged into CBRE. I like to stay plugged into people who are looking at bigger numbers and ensuring that I'm not going against the flow, and ensuring that I'm in the middle of the strongest current if possible, right? I do not want to be overrun by all the bankers or all the large equity firms deciding that a certain municipality is not the place to play anymore, especially on the exit. I do not want to fight that battle and have very few people considering to purchase something I'm trying to get off my hands. Then narrowing down from the macro, picking out the specific municipality, I want to know that there's a huge delta between that household income to rent. And then I also want to know that we've got huge growth on the ground. Those to me are two personal factors that I don't ever want to miss out on. And then looking at the municipality itself, you can't build. Developers aren't building in general. The United States usually builds over 25 million houses per decade for the last 4 decades, but in the last 10 years, we only built about 6 million houses, right? So, we're building a fraction of what the supply used to be. But the zoning itself, very specifically in our area, doesn't even allow you to build. I mean, I'm not a civil engineer. I can't say this technically, but it looks like only 1 or 2 other properties, garden style properties, can still be built in this area. That's the type of moat I want. I don't want to compete. If you go to Allen, Texas, if you go to Northeast Dallas, it's beautiful. It's great. It's the quintessential quality suburbs. We've got a top 5 school for all of DFW right next to our property. It's fantastic. It's just a lovely place to live. And if I move to Texas, that's probably where I'm going. McKinney, Plano, Allen, maybe down to Arlington. I don't know. But I want to know that I don't need to compete with other people, and my tenant base has to consider me. I'm going to get looked at. My asset is going to be considered. That's the type of moat, and that's what we're looking for within those areas. And aside from numbers, hop on a plane and go. Like you really need. I flew from Chicago to Austin, different city, but flew from Chicago to Austin. Spent about 5 hours in the airport, walking around, listening to a podcast, probably yours. And when my gate lined up, the average age had to have been less than 30. It looked completely different than every other gate. It looked like we were all lining up for grad school. And it just hit me. And I saw it because it's something I'm looking for, I suppose, or something at the front of my mind. But that is who's going to Texas. That's who's going to Austin. That's who's going to DFW. A young, growing population. I mean, DFW added 100,000 people from July of 20 to July of 21. That still has ramifications. Interest rates aside, actual job growth aside, 100,000 people just up and left and went to DFW and increased the population by darn near 10%. That's still seeping into the market, right? That's the kind of place I want to be buying. We have tenants who were just rooming. They were shacked up with a roommate for 6 months before they could find a unit, right? That's the kind of overflow you have. They had never done that before in their life. They make good money, but they had to. They had to find a roommate just so that they could get inside of 4 walls and a roof. That's the situation. That's what I want.
I mentioned being in Austin. When I was there, every person I met was 25, and they moved to Austin less than a year ago. And for apartment investors, it's can't be better than that.
Talk to Uber drivers. Uber drivers know who they're picking up. I talked to every single, I must have had 12 or 15 Ubers while I was there. I didn't rent a car. And I asked every single one, hey, how's Austin changed? How long have you been here? What areas do people like? And it was always the same answers. They're like, man, the city gets younger and younger. It gets newer and newer. And some of those guys had been there for 20 years. They're like, dude, I never thought that a building higher than 25 stories was going to be built here. And I was like, well, you got a lot of them now. So you can feel it. Aside from spreadsheets, you move to any one of these cities, you can feel it. Even when I went to, we have 2 properties. They're both about 100 units up in Kansas City. And you go there and you're like, okay, this feels pretty good, but it's also not the same vibe as the areas in Texas that I've been checking out. And it shows up on paper. Greater cash flow, lower price per unit for all our tenants. I mean, you can feel what is in the Excel sheets in the city and kind of reconfirm what you're seeing. It's pretty interesting.
Tampa, Florida, our second market is the exact same way. I first went there in 2014, and the difference from then to now is incredible. It's so young. I mean, new neighborhoods pop up. Like there's a new Midtown, a new Gasworks district. That's just new districts that are built in seemingly a couple months. And there's a select few cities in the country that are going to see that growth.
Look, to the novice from the outside looking in, all this building, all this construction, all these new things going up, it's kind of like, oh, why? People throw around the word, bubble, or they don't know if the building is really necessary. They can't believe there's that much expansion. There's been less building material, less expansion nationwide, and in Tampa and in these municipalities than ever before. Like, it is filling in the gap that has been growing. You could keep building in the top 20 cities for the next 10 years straight. If you're a developer, they all know it. They could just keep throwing money in again and again and again on pretty much any type of building aside from perhaps small office space, and it's going to get leased out. And it's just that we've got this huge deficit in terms of material. We really do. The problem is it costs more to build a unit in every single city we've been buying in than it does for me to renovate and create a new, a better property, right? To take a B to an A minus. So, like, you cannot build at the total all-in cost that we're buying units for, right? And that's why people aren't developing. So it is an interesting situation, especially when you look at workforce housing. I keep throwing around this theory because I want people to review these podcasts and hear me say it first. But I think in the next 6 to 10 years, the federal government will snap and create a very large offshoot of Section 8 and start really incentivizing developers. But there's a lot more to that. We can break it down in podcast number 2 if you want. But
I completely
I
agree.
think we'll see that.
Absolutely. Bradley, I agree with everything you've
No,
been saying. I'm really impressed by everything you've said today, but we do want to respect your time. Bill, you want to take this away?
Yeah, let's finish up. And yes, we got to have you back. I was in Austin, 2 or 3 months ago, and I can see how it's like a kid in a candy store with the nightlife. I was amazed. I hadn't seen anything like Austin, as far as going out at 11, 12 at night, going from literally one spot. Now we can go over here. Now we can go over there. So there's all these different spots of different flavors of nightlife in Austin. So it was very, very attractive that way to the younger crowd for sure. But this is the Collecting Real Estate show, and they say you have to have 3 of something to make a collection. So we've got 3 questions for you. Number 1, in 5 words or so, what's the most important thing you've learned since you started collecting real estate?
Quality matters.
Awesome. Nice and short and simple and powerful. Number 2, what are your 1 to 2 year personal goals?
Financial freedom.
All right. I love that.
I mean, personally, yeah, I want the stability so I can pursue.
Well, Stephen, does that pass the bar as far as a personal goal? I know that you're a stickler here. Is that a financial goal?
We usually try and keep personal goals away from real estate. I want to hear about your running. I want to hear about your other hobbies.
Oh, sure. Well, I'd like to climb the 7 peaks. So Mount Aconcagua down in Argentina. I'd like to hike that. Yeah, I'd like to summit the 7 peaks on each one of the continents. So that's I won't knock that out in 2 years, but that's my internal personal goal. That's just for me.
That's
love it. Awesome. Number 3, how can we and the listeners assist you, and how do we contact you?
Bradley at symphonycapitalgroup.com. That's our website, symphonycapitalgroup.com. I'm always up for a conversation, always up to talk about what people are seeing. In terms of assistance, if you got a good-looking property in the DFW area that you think someone should look at and you think fits the quality standards I'm talking about, I'm more than willing to take a look at it, especially if you know about some special angle or some reason why it's positioned well. Yeah, let's hear about it. I'd like to hear more. If you're aware of the next DFW or Tampa or Austin springing up in the middle of the country or down in the Southwest, let me know. We think we know what's going on, but maybe you've got some insider information. Feel free to reach out with that.
No, geez, it's challenging to stay ahead of that curve, considering that the high demand of real estate investment in this day and age. And I'm super impressed how you've been able to build what you've built in Texas, because Texas has a lot of competition, not only just real estate investments in general, but you're going for the A class and making it work with great returns for your investors. So very impressed with that. Once again, we're thankful that you came on the Collecting Real Estate show, and enjoy your holiday weekend.
Thanks, guys. Same to you. Thanks for having me on.
Thanks, Bradley.